Have you ever wondered how Tesla became the largest global automaker? The company now has a staggering market cap of over $500 billion.
Yeah, it's been a wild ride for Tesla since 2020. Now outshining giants like Toyota, Porsche, Chinese EV maker BYD, Mercedes-Benz, and Volkswagen combined.
This incredible rally is no accident. After years of struggle, Tesla has quadrupled its revenue since 2018, turning profitable and cash flow positive in 2020. And it's making it one of the most fascinating growth stories in the past decade. And we're going to share with you the 3 secrets of Tesla's business model today.
Tesla's popularity on Wall Street is undeniable, yet it remains a pretty polarizing stock.
While bulls see incredible long-term potential as a tech powerhouse, bears question the execution risk and the valuation compared to traditional automakers.
So is Tesla more of a car manufacturer or a tech titan? Join us as we explore the company's journey so far and its potential for future success. Let's find out.
Hi there, I'm Bertrand, and I'm the founder of App Economy Insights.
And I am Stephanie, tech veteran, engineer, and creator. All right, now let's talk about Tesla's Fantastic Four. We got the Model S, we got the Model 3, Model X, and Model Y. So buckle up as we speed through their key features.
First up is the Model S, Tesla's flagship sedan.
Next, we have the Model 3. More affordable than the Model S, it has played a major role in popularizing electric vehicles.
Next is a Model X. It's Tesla's unique SUV, known for its iconic Falcon wing doors. It sits up to 7 passengers and a towing capacity of up to 5,000 pounds.
And lastly, we have the Model Y, Tesla's best-selling vehicle. It takes elements from both the Model 3 and the Model X.
And hey, in case you haven't noticed, the model spelled sexy. That's Elon Musk's cheeky sense of humor shining through right there.
Wow, I actually never knew that, so I'm not surprised it's actually coming from Elon Musk. Okay, so let's take a moment to look at the global EV production landscape in 2022.
Interestingly, Chinese EV maker BYD leapfrogged Tesla, producing an astonishing 1.9 million vehicles, representing a 211% year-over-year growth.
Tesla, on the other hand, held its own with a production of 1.3 million vehicles, achieving a solid 40% year-over-year growth.
These figures highlight the rapid growth and competition in the EV market as companies race to meet increasing demand for electric transportation.
Now let's take a peek at Tesla's future lineup.
First, we have the Cybertruck, an all-electric pickup. It boasts a unique design and impressive capabilities, aiming to shake up the truck market.
And next, the Tesla Semi aims to bring electric efficiency and sustainability to the freight industry with improved energy savings and driver comfort.
And there's also a Cyberquad and a Roadster that were previously teased, but they don't appear to be on the company's radar anytime soon.
Before we delve into how Tesla makes money, we have a very small request here. We'd love for you to hit that subscribe button. You'll get instant access to our weekly videos as they're released, and of course, help others discover our channel so that we can keep creating content that helps you become a better tech leader, investor, and entrepreneur. Did you know Tesla has 3 main revenue streams that drive its business?
Well, first up, we have automotive revenue. In short, selling and leasing electric vehicles. It makes up a massive 86% of their revenue. Note that it includes regulatory credits, which are relatively small at about 2% of overall revenue, but they boost margins.
Next, we have energy generation and storage, accounting for around 7% of revenue. It's a rapidly growing segment, soaring by 148% year over year in Q1 FY23.
Lastly, there is services, comprising about 8% of revenue. This category includes repair, licensing, data storage, insurance, and much more.
Cost of revenue includes direct costs like materials, manufacturing, labor, and logistics. One way to improve gross profit is to find cost efficiencies. So in short, reducing expenses without sacrificing quality or production. So for Tesla, this means streamlining processes, economies of scale, negotiating better supplier deals, or investing in automation. By cutting costs, Tesla can boost its gross profit margin and financial performance.
Tesla has better margins than the rest of the auto industry. In fact, in the past 12 months, its operating margin is even higher than the average of the S&P 500. So what is the company's secret? Tesla's gross margin has been over 25% in recent quarters, while other car makers tend to be in the 15 to 20% range. So for one thing, the company is more efficient with economies of scale coming from its gigafactories.
But there is more. So look at this chart. Most automakers spend hundreds of dollars in advertising for each car sold. Meanwhile, Tesla's advertising spending is $0. Tesla doesn't spend any money advertising its cars.
That's right. It's a key ingredient to Tesla's superior profit margin, zero advertising spending, and they still maintain a huge demand for their cars. Much of this can be attributed to the popularity of Elon Musk and word of mouth.
Yeah, so you notice how we don't spend money on advertising for this channel either yet. And while we're no Elon Musk, we are counting on you for word of mouth.
And while other car companies rely on car dealers to sell their cars, Tesla doesn't. If you want to buy a Tesla, you head over to their website or go to their showroom. There is no third party involved.
All right, so let's break down revenue further. When it comes to auto revenue, we look at two things: the number of deliveries and the average selling price, or ASP for short. Sounds pretty simple, right?
Tesla has some highly sought after cars, and historically, it has struggled to keep up with demand due to production challenges. In 2022, the wait time for the Model 3 was still about a year. Management expects deliveries to grow at a 50% compound annual growth rate from the 2020 level. And so far, so good. Management expects to reach 1.8 million deliveries in 2023.
Tesla has been able to steadily improve its market share from essentially 0 in 2017 to almost 4% in North America in 2023.
However, Tesla now faces increasing competition from other automakers entering the EV market. And keep in mind, this is a challenging macro environment. To maintain and grow its market share, Tesla is cutting prices, aiming to attract more customers and speed up the shift to EVs.
The ASP has steadily decreased in past years. Meanwhile, the operating margin has improved. It shows that the company has excelled at cost efficiencies and operating leverage. The cost of a Model 3 has dropped by 30% from 2018 to 2022.
It's too early to tell if Tesla's strategy will succeed, but their willingness to lower prices indicates their determination to grow market share and stay ahead of the game.
Now, let's discuss autopilot and full self-driving, or FSD for short. Tesla has reached over 150 million miles driven by FSD beta.
This chart illustrates the cumulative miles driven in FSD beta by over 400,000 Tesla drivers. It clearly shows an acceleration in miles driven as more and more drivers test out the FSD feature. This is a data advantage for Tesla because training data is critical to achieving autonomy.
Okay, ready for a quick ride through self-driving technology? Let's explore the levels of driving automation and why level 4 would be a game changer for Tesla.
So there are 6 levels of driving automation, from level 0, no automation, to level 5, full automation. Tesla's autopilot sits at level 2, controlling acceleration, braking, and steering under specific conditions, but it still requires driver attention.
Level 4, high automation, is the sweet spot Tesla aims for. At this level, the vehicle handles almost all driving tasks without human intervention. So imagine napping, reading, or binge watching your videos while your Tesla safely navigates. Hopefully you're watching this channel.
Reaching level 4 would revolutionize transportation, reduce accidents, and unlock new revenue streams like autonomous ride-sharing services. Let's dive now into energy and storage. It includes things like solar roof tiles and Powerwall home batteries, Tesla's fastest growing segment.
Energy storage deployment hit nearly 4 gigawatt hours in Q1, marking the strongest quarter ever with a 360% year-over-year increase. The successful ramp-up of the Megapack factory in Lathrop, California has made a difference, and another one is planned in Shanghai.
We can expect this segment to keep growing as Tesla sells more solar panels and battery storage systems, potentially becoming a major revenue source for the future.
Currently, energy has a lower gross margin profile than auto sales at around 11%. However, management anticipates margin improvements.
Now, let's talk about Tesla's long shot bets, the Dojo chips and the humanoid robot Optimus.
The Dojo chip is Tesla's in-house developed AI processor designed to improve and accelerate the company's self-driving capabilities. These advanced chips could potentially revolutionize AI computing and give Tesla an edge in the race for full autonomy.
As for the humanoid robot Optimus, also known as the Tesla Bot, it's another ambitious project announced by Tesla. Optimus is designed to perform tasks that are dangerous, repetitive, or simply tedious for humans, ultimately improving safety and efficiency. While both projects are still in development. They showcase Tesla's drive for innovation and their commitment to pushing the boundaries of technology. Elon Musk is known for making bold claims about future product releases to build hype and retain talent. However, it remains to be seen if the company can deliver on its ambitious goals.
Okay, so the question a lot of you might be asking is, what about investing in Tesla? Now, investing in Tesla at its current valuation requires believing it will unlock more revenue from its fleet of vehicles through autonomy.
In a recent article reviewing Tesla's earnings, I highlighted a quote from Elon Musk at the end of the earnings call. So he said, "We are the only ones making cars that technically we could sell for zero profit for now and then yield actually tremendous economics in the future through autonomy. No one else can do that."
This approach is similar to Apple's strategy. Apple has built a large install base of smartphones, tablets, and computers, and now the company benefits from an entire ecosystem with digital services and new monetization avenues. But that's a topic for another video that we're making. So stay tuned for our next video on tech disruption coming up.
If you like this business breakdown, we have another one coming right up.
Yes, we actually break down how Amazon makes money, and you might be a little bit surprised because just like Tesla, Amazon is often misunderstood. So let's find out why, and we'll see you right there next.